It could end up becoming the fight of the decade. Hong Kong and Singapore are locked in a battle, and it's over the future of crypto. Hong Kong and Singapore are two of the largest financial hubs in the whole world. They're also long-term rivals. They're both former British colonies in Asia with low tax environments oriented heavily towards trade and, in particular, financial services. Over the last decade, Hong Kong has largely dominated the fight, in particular for initial public offerings. The size of its stock market is also still about 7 times the size of Singapore's. The Lion City, by contrast, has tended to have more success with things like offshore derivatives, foreign exchange, and commodities trading. Now, both cities have spent the last few years trying to figure crypto out, but Singapore has had a bit of an edge. According to KPMG, investment in the city's crypto and blockchain companies surged to almost $1.5 billion in 2021. That was nearly the total amount for the whole of Asia Pacific. Rules there have been described as forward-looking and has seen the likes of Huobi and Gemini setting up major presences in the city. Singapore's FinTech Week, meanwhile, just saw Paxos and Circle announcing they'd won approval to operate in the jurisdiction. Circle's Chief Strategy Officer, Dante Disparte, said that the move would, quote, strengthen Singapore's position as a global hub for digital assets. Paxos, meanwhile, told Bloomberg it was now hiring another 130 people in the Lion City, calling it the future of Web3. So Hong Kong has been playing catch-up, but as we've already mentioned in other videos, it's just taken a major step forwards. A policy announcement at its FinTech Week, taking place at the same time as Singapore's, has brought some big changes. That includes fewer retail trading restrictions, green bond tokenization, and a new licensing regime for virtual assets.
We want to make our policy stance clear to global markets, to demonstrate our determination to explore financial innovation together with global virtual assets community.
Now, the move has been welcomed by many, including Neil Tan, who's chairman of the FinTech Association of Hong Kong. He reckons, while it's still playing catch-up, waiting until now has actually given Hong Kong an advantage.
Dubai and also Singapore have already shown their cards as far as what the regulatory framework would look for those jurisdictions. So now I think that Hong Kong is in a very strong position. Now it's stepping into a much more broader forum in terms of the framework and then also accessing retail.
Big names in crypto are now considering their stance on the city. That includes exchange OKX. Its managing director Lennox Lai told us, while Singapore and Hong Kong have things in common, there's one significant difference.
Hong Kong or Singapore share similar area of talent pool, so everyone is a good place for building financial products. We got a good product and engineering in both places, Hong Kong. Both of them seems to be consider having an encouraging attitude to this industry. So everyone started to build Web3 technologies here. It's really about the customer profile and the potential market. Potentially serving mainland customer is the very important differentiation.
Crypto, of course, remains banned in the Chinese mainland, and that had fueled speculation that Hong Kong may not open up to it either. But as a special administrative region of the People's Republic, there is leeway for some differences in policy. And that's a point both Hong Kong's government and regulators have repeatedly stressed of late. Yat Siu, co-founder and executive chairman of Animoca Brands, says this is a huge positive.
One of the things that I always have to deal with when I'm traveling overseas is the conversation of, oh, Hong Kong, isn't that China? You know, you can't do this, you can't do that. And of course, every time I have to defend Hong Kong every single time. Now I think with this policy, it sets a good foot forward.
Crucially, this means Hong Kong could now do things differently and perhaps become an ideal testing ground for a Chinese rethink
of how we position as the gateway to China. And also China will think Hong Kong as the gatekeeper or the testbed for anything frontier. Based on my understanding and conversation with the Chinese regulator and Hong Kong regulators, they do have a very in-depth understanding of blockchain technology, Web3 technology with the potential and the risks behind. So I think maybe the Chinese government, even the Hong Kong government, is starting to recognize that crypto is a real deal. It's a sophisticated asset class. the regulation picked up everywhere else in the world. So if China want to do something about it, why not try for Hong Kong first?
Not everyone agrees though, and some have also said that Hong Kong's regulatory changes may be too little, too late. FTX founder and CEO Sam Bankman-Fried tweeted, "If only it had come last year." FTX, the world's second largest crypto exchange, was actually founded in Hong Kong, but it left in 2021, citing regulatory uncertainty and COVID-19 restrictions. Given its current stance, any big changes from mainland China would also appear to be a long way off yet. That's a key reason why China's most successful crypto company, Huobi, has just said it is following FTX to the Caribbean. While Hong Kong's change in policy has been broadly welcomed, there's still reservations about what's to come.
Yeah, we expect that there would be a lot of limitation. We can expect there would be a suitability test for investor. We expect different kind of restriction, but at least the direction that we're going, that on someday in certain future, Hong Kong general public can really accept Bitcoin.
So where does this leave what we call the potential battle of the decade? Does there really need to be a winner, or could there be a third way? Vincent Chock, CEO of First Digital Trust, reckons there is still a chance that both cities could work together to improve things even further.
These two jurisdictions are so close to each other, we can really complement each other, and we have a different style of doing things in these two countries. So I think that we just got to think about ways of cooperating.
Whatever happens, greater competition can only be a good thing. As one crypto leader recently said during the two fintech weeks, this looks like the start of an exciting new chapter. Or perhaps it won't be. If you disagree, let us know why in the comments below, and where you think the future of Web3 will actually be in Asia or elsewhere. And if you want to see more content like this video, like, subscribe, and hit that notification bell. People generate a huge amount of data every day. Data of all sorts, from where you pick your groceries up to how you spend the money that's in your bank account. And the need for sorting all of this information is expected only to move in one direction, and that, of course, is up. Forkast's editor-in-chief Angie Lau has been catching up with Clara Zhao at Phil Lisbon to talk about this insatiable demand for data and find out what Filecoin is doing about it.
Clara, there's a lot of news coming out of Filecoin Lisbon, but I want to ask you about a bigger issue here, which is the 200 trillion gigabytes. I think that's what, 200 million petabytes. I can't get the math right, but it's a lot of data that is swirling in the world. And a lot of the storage capacity that we have is very much centralized. And I want to understand a little bit more how decentralized storage actually might be a potential solution.
Absolutely. So as you might know, there's over 200 zettabytes of data potentially available by 2025, according to most market reports. And 80% of that is actually driven by large enterprises. And so if you think about the large companies, say Amazon, Microsoft, Google, they own most of the world's data. And what we're trying to do here is really think about data as a distributed resource that everyone should have access to and can come from all parts of the world. And so we created the Decentralized Storage Alliance together with Protocol Labs, AMD, Ernst & Young, as well as the largest storage hardware provider in the world, Seagate. And for me, I'm most excited about really three major things. Number one is that we're seeing increased demand from enterprises wanting to have decentralized data. In fact, a recent report said over 90% of enterprises today are looking for a decentralized solution. We also are hearing that today enterprises really want a geographic distribution when it comes to where their data is stored. And so if you imagine today's data being in one data center, people want redundant copies of it and they want it geographically dispersed, so there's no single point of failure. And then number three is they definitely are looking at technologies like ourselves to be a great resource for that. So Filecoin, today we have over 16 exabytes of available storage. We are the leading cloud provider for storage in Web3, and also bringing on a lot of Web2 clients along the way. If you guys remember, just 1 year ago, October 6th, Facebook had a massive outage. People couldn't log in, businesses couldn't use it, and in fact, $60 million of revenue was lost that day. So this is kind of the importance of making sure that for companies all alike, large and small, that we can have protection in data, and there's no better solution to that than a decentralized data network like Filecoin, and also the incredible community that's building it with us.
I just want to share one stat with you that I thought was really interesting. Cloud adoption among enterprise is still only up to 15% of IT spending after 16 years. So this is the private enterprise side with centralized cloud storage. What are the challenges for decentralized storage providers like Filecoin as we ramp up to the future? Does this need to be more of a decentralized, a more public movement here?
Yeah, we in fact are trying to get as many storage providers on our network as possible, and we actually just celebrated this week Filecoin's second birthday. So in just 2 years, building up 16 exabytes of available storage through our network and continuing to grow, I think that's pretty incredible. But most of these enterprises and storage providers we're working with, they're stepping up. They want to provide the support, because you can imagine in a decentralized network, one of the challenges is you can't just call one single hotline when something happens, or you can't understand resources. And we actually argue that this is even better. You now have 4,000 people all around the world that will help support you, motivated to, and they're creating resources with each other. We saw the opportunity when the open source movement started for a community of developers to co-build technology together, and I can't imagine an even better system when we have a community of storage providers, experts on storage, really thinking about how we can build and build better than just one centralized place for that.
And before we go, I gotta ask you about this, because it's so obvious that this is the future of work. You know, when you have so many developers and so many partners coming together in one place, where do you see this going in 2023 as you build up the projects? But also, what does this mean in a post-COVID world?
Yeah, well, during COVID, one thing that we absolutely did see was more and more use of data. And data is not going away. People are crazy about crypto, but my favorite thing is data is the most important currency of our time. And being able to actually get data that you need in the time you need it, but also make it affordable, is the most critical thing out there. And Filecoin, for us, one of our biggest missions is to preserve humanity's most important information. So we want to make data not only accessible, but also affordable. So we're at around 1/100th the cost comparable to AWS for storage. And we're also thinking about nonprofits, public institutions. Think about libraries today in the digital world that need data to be able to upkeep information that's critical for every citizen in every country to access. And that, to me, is so important. And unfortunately, when you have monopolized data in the hands of certain cloud providers, this becomes really, really hard for the price to be controlled. And we're already seeing a number of public institutions, universities, not be able to save important scientific data because of how high the cost is. When you're doing genome sequencing, you're running it through major databases, that's so expensive.
It's only going to get worse unless there's a solution, and I'm glad that there is a lot more technology optionality out there. It's important not only for, enterprise, it's important for everyone. It's our own data at risk here.
Absolutely, and we have already started to work with a number of institutions, from MIT to Stanford to governments like New York City's Open Data, to really pilot and think about what the future could be. And we are just getting started, so we can't wait for more.
Thank you so much. Claire Zhao here. We're at Filecoin Lisbon, Phil Lisbon, as it were, signing back to you from Portugal to Hong Kong.
And you can catch even more blockchain developments at Phil Lisbon's summit. That is on until November the 4th.